The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OX Radio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. This is, of course, your bi-weekly, that's twice a week, not every 2 weeks, so in case you're confused, twice a week, source for all things options related. My name is Mark Longo from the optionsinsider.com, as well as the Options Insider Radio Network. Looking forward to a good pre-holiday, pre-kickoff to the summer Option Block episode, and joining me for this pre-summer episode, I suppose you can call it, this lead up, this kickoff to the summer episode. Starting off, let's go in order of proximity this time, and the closest to us is none other than the Viceroy, beaming in from the hallowed halls of Options Express. Alex Jacobson, welcome back to the program, sir.
Hey, Mark, good to be here, and a very busy day in the option markets today. This is one of those days where you go home and your spouse looks at you and says, what did the market do today? And you say, the Dow was down 12 and S&P was down 4. And she says, oh, quiet day. You want to start throwing things like, oh, no, it was an eventful day.
Yeah, we actually had some two-directional paper for a change today, so that's kind of interesting. Haven't seen a day like this in a while, so that'll give us some grist for the mill. And joining me to chew on that grist is none other than Uncle Mike Tusaw from RCM Asset Management. Uncle Mike, welcome back to the show, sir.
I was just thinking about how much I like to chew on the old grist, Excited to be here as always. A lot to talk about today for sure.
It is tasty and delicious, that grist. I think it gets a bad rap. They should have grist snacks in all of our local supermarkets. I think they'd be a big hit with the kids.
I was just thinking that.
There you go. Spin-off project from the Option Block. I can see the millions pouring in already as we sell bags full of nitrate-laden fat to children to chew on. It'll be huge hits with all the moms out there.
Love it. This is one of my $1 million ideas. What I'm going to do, I'm going to wear one of those red and white striped suits, stand at a carnival, and I'm going to have a booth that's going to be called Health Foods Aren't Us. I'm going to sell chicken skin. I'm going to sell every possible thing that's bad for you there. Now I can add grist to the list.
I like it. I think it'll be a big hit at the old county fairs where they sell things like fried Twinkies and all sorts of fun things that are just not good for you in any way, shape, or form.
Love it.
Speaking of not good for you in any way, shape, or form, we are joined last but not least by the Rock Lobster himself, beaming in from the land of the Option Pit by way of the great state of Maine. Andrew, welcome back to the program, sir.
Thank you. It's always a pleasure to be here. It's twice this week.
Yeah, you're setting some new records.
Well, I'm going to be gone on vacation for the next 10 days, so you got Sebastian for the foreseeable future.
Of course, no vol views tomorrow, so you can't make it a trifecta this week.
No, I can't. I think I've done a trifecta before, but no vol views. Very sad. Won't be able to attend the vol views, but I will be on my way to Hither and Yon. So Cape Cod for me.
I love Hither and Yon. I have my tickets to Hither and Yon just for a couple of weeks from now. I love going there. Great place. Great rides. I like the Yon part a little bit better than the Hither, though. I've never been that big fan of the Hither, but the Yon, that's good stuff.
It's tough to get over the Hither to get to the Yon.
All right, before we get too far down the nonsense rabbit hole, let's keep on rolling right on into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the show where we look back on the day's activity and what caught our eye and what moved the old tape from an options perspective. And as Alex mentioned at the top of the show, what we closed at the end of the day with most of the major indices closing fractionally down on the day kind of belies the activity that lurked underneath there for most of the day. We actually saw some interesting back and forth movement, interesting back and forth paper flow. Some of the indices were actually up on the day for a little while intraday, and then they were unched, and then they were down, and there was this seesaw pull back and forth. So much more of a two-sided day than we've seen of late. Perhaps that reflects a little bit of some of the unease creeping in now that we keep hitting these and pushing at these record highs. Maybe it's just natural give and take of a market at these historic levels, whatever the case may be. There's a lot of things playing into that give and take, but we saw a lot of interesting things going on today. Even though the markets were relatively unched on the day, we still saw a bit of a spike in the old VIX cash, up about 0.3 of a point to 14.11. Not a typical development when we see going into a holiday weekend like this. Usually a day like today, even with a little bit down day, they're looking to take the air out of the balloon any way they can get. They can do it, and they didn't do that today. They actually were a little bit hesitant to do that. So interesting stuff going on all around. Maybe Andrew, we'll start with you. Let's talk about how some of that air not really coming out yet of the old VIX balloon.
What's funny is the air was in the VIX futures for the last couple days when we had these highs. And the air did come out of the VIX futures today. A June future no longer $2 over, only about $1.40. So 60 cents came out of them the last 2 days.
So they took some of the air out of the term structure then out in the VIX.
You see, it didn't come out of the actual cash. I mean, we did basically have had a pretty good swing over the last couple days, like 2% maybe from top to bottom. That's enough to keep the VIX at around a 14. I think that's at least fair, short term. So I didn't expect the cash to come down a whole lot, but of course we need to keep that movement sustained in order to keep the volatility up there. So I don't see the VIX cash, obviously if we tank tomorrow for whatever reason, but VIX cash probably fair. It could creep down to the mid 13s again if we don't have any movement, but at least I think today after the moves we've had, it's pretty fair-esque. But the vol futures did come in quite a bit.
Well, that's something we've been looking at for a while and how that term structure was getting, I think you can call it, to use a technical term, a wee bit wonky out there in VIX futures land. So it's nice to see that some of that finally coming in a little aggressively today too. So it sounds like you're right. The air did come out just in a different direction than perhaps.
And I think you had a lot of future owners just, hitting the exits and pounding it down. That's what generally happens. So yeah, there you go. And I think we have a little skew come in as well today in puts overall in the indexes. So I think it was a day for people that own puts, that bought them when the market, they've probably, I don't know if they've been playing this game or they've been buying puts and then waiting for the market to tank. But they got their win today if they sold some puts, this morning when we were down about 1%.
Speaking of VIX, we have a brand spanking new addition to the VIX family, the ever-expanding VIX family. This one is a new 10-year Treasury VIX. CBOE and CME jointly announced that this morning, that they were launching that. I use that term in quotes, really. You can see my air quotes on the radio. That works very well. But they were launching that this morning. But really, this is another one of these indices that they're disseminating in real time, so you can use it for your own calculations. And it's interesting for an academic and theoretical perspective, but no particular futures or options trading on that yet. I do note that at the end of the release for this one, something I haven't seen in some of the other recent VIX announcements that they've had. They do put a little line there at the end. It's almost like a bit in there to appease me, because I always bug them about this. And they put a little line at the end saying CBOE and CBOE Futures Exchange plan to offer trading on the 10-year Treasury Volatility Index in the future. So very nebulous, nothing at all concrete, but at the very least, sounds like they've been listening to this show of late, particularly you, Alex. You've been going on a lot about the macro stuff and the treasuries, and I know Sebastian has as well with the TLT. Here's CBOE and CME reacting, putting out a 10-year treasury VIX. Alex or Andrew, have you guys had a chance to digest this at all yet?
Yeah, I may be the only one who's going to say this, but I'm excited by it because when we built the Idea Hub, we built it on the CBOE benchmarks to use that vol benchmark that they broadcast. So one of the things we looked at when we spec'd out the futures options part of Idea Hub, which is still in development, was everybody said, give us the Eurodollar, give us the 10-year. And we said, well, we don't have a good benchmark. We just got a benchmark. So now I'll be able to add 10-year options to the premium harvesting section of futures options. So, I may be one of the lone voices on the street, but I like the fact that it's going to exist. And I urge both the CBOE and the CME to actually list one of these, take the chance here, put one of these out there. We can rehash forever the history of VIX and the reluctance to trade it and the on-again, off-again support, and now it's a big product. So we're excited here at OX and Schwab about the prospects for it.
That's true, Alex. You guys over there at OX may have the only actual practical implementation of these things in the marketplace right now. You're actually using them to drive the Idea Hub. And that's a nice little ancillary benefit from this. They list this, or I list that in quotes as well. They disseminate this, and then you guys can use that to, of course, add new features and new recommendations to the Idea Hub. So there is some sort of trickle-down effect, I suppose you can call it, from listing these new indices. Andrew, what do you think about this one?
I like it. I like the idea of it. I think it's the thing is right now it might be a little quiet. Actually, it's just funny because I just posted a blog on the treasuries at Option Pit, but it'd probably be a little quiet. What I think would be interesting if they kind of jacked up the tick on it. It'll be kind of vanilla probably, but the range for treasury volatility is mostly like 8. It's trading 14% right now, but it gets about as low as 8. In order to make it kind of a swinging product, maybe you want to juice it a little bit when you actually launch the options, because it might be a little pokey moving. But as maybe Bernanke's bond buying comes off and some of these other things happen, it certainly could be. It'll be a nice. It'll be a nice product to look at, and we'll see what they do about trading the product. Again, I still wish we could have some realized volatility type of products, but again, that's pipe dreamville for me.
Yeah, I think it's to add to what you guys are saying. My old marketing slogan that never caught on in the marketing gurus that were at Options Express many years ago was jump on the boat with a 10-year note. And I think that with what this product does is it brings attention to a market that a lot of retail traders haven't looked at. So for example, let's say you're not getting what you want out of trading in the US stock markets. The volatility is not there, or it's not the right market for you, or maybe there's too much volatility, whatever the case may be. This can open up a whole new world for you. And if it catches on, it could be something really, I think it could be a really good thing for everyone involved.
Yeah, I've learned to hold my breath on these things and not get too excited because they've listed God knows how many of these things now, and precious few of them actually trade or even have any chance of trading. It seems like whenever I sit down with the CBOE, I always ask them the same questions. When are any of these single name VIX or any of these other interesting VIX that you've disseminated and listed over the past couple of years, when are any of them going to become concrete tradable products? And there's still really, for whatever reason, still seems to be a lot of reticence there to launch them. Of course, since we're on the CBOE, we can't move away from the CBOE without discussing the big anniversary, a bit of an ironic one. I was at their big 40th anniversary of options, 40th anniversary of the CBOE Gala last night, a big Chicago star-studded affair. There was all the local celebrities. Rahm was there. I think Myron Scholes was there. A lot of cool people at this shindig last night, and it was, of course, celebrating the 40th anniversary of the CBOE and the 40th anniversary of the options business in general. And an ironic tip of the hat. I think the market tipped their hat today because, of course, CBOE had the earnings this morning before the open, and the stock hit 40 for the first time today on their 40th anniversary at the time for their annual shareholders meeting. So I'm sure some celebrating going on over there in CBOE land. Of course, they are having a big executive changeover too. The CEO of the CBOE stepping down finally after a long time, I believe 16 years at the helm, and Ed Tilley taking the helm. We touched on this a little bit in the past, and I don't want to go down that road too much because it's a little bit inside baseball for a lot of our listeners. But I think it's interesting, particularly for a lot of us here on the show who have market making backgrounds, to finally have a guy who was a liquidity provider at the helm of one of these options exchanges. I think is an interesting thing, because at the end of the day, the core business of the exchanges still is providing liquidity, no matter how far afield they may get from that in a lot of different areas, becoming vendors and other things. They still are supposed to be sources of liquidity. So I have a guy who actually has some skin in that game, a guy who actually did that for a living, running the exchange. I think that's an interesting development here in the exchange realm. So we'll see how the Ed Tilley era unfolds over there at the CBOE as the Brodsky era comes to a close. But interesting stuff going on over in that land. Of course, there are some earnings to discuss as well as we speak right now. Salesforce, ticker symbol CRM, came out after the close. They closed at about $45.70, pretty much unched on the day. That straddle went out at looks like about 330, 340 for the 45 half with 1 day to go. Of course, opens up down about 320. So it's amazing how those straddles work out and how prescient the options market can be sometimes. It's rebounded a bit now. It's only down about $2.30 now in the after hours. So that straddle not seeing its full benefit, its full bounce yet. But Salesforce looks like it's selling off a wee bit in the after hours. We also have Marvell Technology. I always get them confused with Marvel. It looks like they're rallying about $1 in the after hours, closing at $11.31, so up about 8 to 10% right now in the after hours. So some interesting stuff coming on in the old after hours. Andrew, the people have been talking a lot about Tesla of late. We've mentioned it on the show a few times in the past. And I think the ongoing narrative with Tesla now is this thing has more than doubled in the past few months. There's a lot of short interest outstanding on this name. I think something over a quarter of the outstanding float is short now at this point. So we're seeing a lot of people, they can't get the short stock. They're starting to float into the options. It's starting to really distort that put skew a wee bit out there in Tesla. You guys running through this with your students over there at Option Pit, kind of as a live illustration of what happens in some of these names that are hard to borrow?
Yes, absolutely. Actually, the borrow has come in after Tesla did the secondary this week. It's come in a lot. So I would say it's less shorted than it was a week ago by the looks of the buy-in, kind of the negative carry on the buy-ins dropped about $1 with 30 days to go from where it was last week. So, I mean, what's holding the stock? I don't know. The shorts are holding the stock up, I guess, at this point. And, Goldman did a secondary at $91. So, I think there is some, the underwriter is going to keep the stock around this level. It's traded as low as 83 today. When everything kind of just fell apart. So yeah, I think it can plunge, and it hasn't made any really new highs. So, we'll see what happens. But I mean, essentially the company now has the funding to make two more cars. But as far as making profits, I mean, they're not going to make a whole lot of money for the next couple of years. Doesn't matter to pretty much anybody at this point, it looks like, but
only matters to a diehard fundamentalist like you, sir. What's a PE? What's a PE at the end of the day?
I think I'm not going to spend a lot of money shorting the stock at this point, at least not yet. So we spent a couple of dollars, but not too much yet.
Amazing how you float some new shares and suddenly the shorts it's easier to borrow the stock. Amazing how that works.
I know. They can borrow the stock and they can cover it at $92.
It's also not a bad thing when you can float a secondary for 5x to 10x what your IPO was. That's got to be a good feeling.
And, I don't even know what the multiple is, like at 100 times earnings or something like that. Like boom, they got that thing done fast.
Let me, just to appease the diehard fundamentalists like you in the audience, I am pulling it up right now. Where the hell is it? They don't have they have price to book. They don't have price to earning. Maybe because there were no earnings at the time they did this. No,
there
aren't really any earnings.
They made some money this last quarter on tax credits and stuff. I mean, the guy's done a great job of trying to get the product out to market. But is it a $10 billion company? Who knows?
Interesting stuff. A lot of interesting developments coming out this week. I know, Alex, you have a near and dear attraction association to Microsoft. They made some big announcement. Everyone's been waiting for months now for them to announce the latest foray and pretty much one of the few business ventures they have that's actually outside of Windows that's actually profitable. That is, of course, the gaming realm. They announced their new Xbox, somewhat ironically named the Xbox One, even though it's a third one. That's an interesting branding decision in and of itself. But it looks like the street not really loving this one. They kind of been hitting the stock off about 5% or so since the announcement. Apparently this thing not lighting up the tape. There have been some interesting ancillary trickle-down effects, though. We always talk about the plight of liquidity providers in the options market, but there has been this interesting, over the past decade or so, this interesting kind of gray market has popped up in a different space, in that electronic kind of software gaming space, where these names like GameStop and others that come around and essentially become liquidity providers in that space, on this huge used market, where they're essentially the only game in town. And they're making tons, and they're making billions of dollars off buying and selling and making essentially this secondary market for games that they've created, and ripping off their customers dramatically in the process. And they've been making billions of dollars over the years. And it sounds like this new Xbox might actually shut that down and lock down some of these used games. So GME, of course, GameStop, taking it on the chin after this announcement as a result, because if that used game market goes away, they're hurting for business. It's kind of like, it's funny. It's like the old pipe dream you used to have as a market maker. Man, if I had deep pockets and I was the only guy out in this pit, man, I can make everything so wide, and I could just print things all day and just people hit my bid, or take my offer, and I'm just making money on the spread all day long. And that's exactly what GameStop did a few years back in the gaming space, and they've been printing money ever since. And it seems like that license to print money is finally perhaps coming to an end. Mr. Tusaw, what caught your eye in today's activity, sir?
Well, a few things. I think obviously the market's going down as much as they did, and then coming back as they did today. That definitely was an eye catcher. Facebook is something that we're still looking at. The puts that were short have gone in the money, but as I've stated before, I'd be more than happy to own Facebook at 26. They expire this Friday, and so. A bunch of things just kind of on the macro level, and that I'm curious to see just how much more, like with Bernanke's speech yesterday, how much more of an effect that has on the market. I'm still not convinced it's all been digested yet, and that for the most part with what he was going to say was, okay, we're going to keep printing money if we have to, but we don't think we need to. That's kind of what I got from it, and I'm just curious to see how that ends up.
I know. What do you make of the recent, I suppose you can call it the influx of juice out there into Ford land? This thing's starting to move. Of course, it's up 20% or so over the past few weeks, and that in and of itself is a substantial move. We're also seeing some vol starting to creep into this name. This thing had a 60-cent range today, down to 14.37, up to almost 15. It's moving quite a bit. Starting to see like front month and some of these near-term months creeping up from about a 21 to a 26 vol out there. So Ford is starting to get some life in it out there. I know you were kind of playing the wait-and-see game. Is this influx of volatility starting to perhaps attract you to some more puts? I
guess it's playing the wait and saw game now, because I saw it go up and I missed it along those lines. But in terms of selling a put, I definitely think that I'd want to see it come down in value a little bit more before I would consider selling a put on it again. But nonetheless, I still think it's a great company, but I think it's a little bit overbought right now, and I'm having a hard time wanting to get into the markets in general right now. I'm continuing across the board with a lot of our holdings just to either roll up protective puts or roll up long calls, just because of the fact that when everything was happening yesterday and everyone thought it was such a big deal that the market actually had a down day, which I guess it was kind of a big deal with the daily action of how it was happening. I like taking money off the table when things go up.
You'll never go broke that way, sir.
Unless you put it back into something worse.
So take out a Ford and put it into Tesla at 90. There we go.
There we go.
I like it. I like that trade. Do that all day.
You mean short it, right?
What's funny is that might work.
Yeah, who knows? The thing could double again overnight to 180, and there you go. Look like a genius buying Tesla at 90. All right. That's going to do it for the old trading block for today. Now we're going to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, and welcome to the Odd Block. I hope all of you playing the home game have donned your fedoras and are dressed appropriately in trench coats and other suitable attire to investigate the seedier side of the options business. I'm going to kick things off with an Odd Block special. This is a biotech, $7 biotech, a little pricey for our standards, actually. We like them in the 2 to 3 range, but we'll take Halozyme Therapeutics, ticker symbol HALO. Of course, that's not Master Chief, no Covenant, no fighting alien space marines here in this one. This is, of course, Halozyme Therapeutics. They are just a biopharmaceutical company. They focus on human enzymes and all sorts of fun stuff like that. Closed today at $7.45, up about 4%. On the day today, this is a name that usually does about 1,000 contracts a day. So for a $7 stock, that's actually fairly active. They did 10x that, more than 10x, the 10,000 contracts going up on the day today. And the bulk of those coming out here in the July 10 calls. They went up for 30 cents in some substantial size, including a block of 4,500 with a total of 6,300 going up on the day. This is, of course, a strike that only has about 2,700 contracts open. So this is a bunch of bullish paper. And looking here at the chart of Halo, this guy may not be, who knows, this is a bit aggressive, actually. When you look at the pure underlying chart here, this thing has danced with about 8.5 over the past 6 months, but it hasn't really broke through that range. This guy thinking perhaps that there is more upside, some hither and some yon here, looking ahead in Halozyme Therapeutics. Andrew, what make you of these July 10s? Are these just our standard OTM call buy, swinging for the fences?
Yeah, it feels like, but he's already up 100% on them today.
Well, there are worse things.
So he was really right. Or he or she was really right. We are gender neutral on the option block.
Kind of nice when you buy so many, you kind of make yourself a self-fulfilling prophecy.
Exactly. I mean, volatility, IV30's up 15 points. I mean, there was just buy. So I don't know if their news on whatever their hot drug is working. But this is kind of one of those things where you have somebody jumping on the volatility bandwagon, and vol's pushed up pretty much in every strike in every month. So, do you jump on or not? But I would look around to see when. Apparently, they have some news coming out relatively soon. Pretty big jump for a little stock like this. So then just there you have it. Just looks like very bullish paper waiting for something to come out, or somehow somebody leaks something's going to come out. So.
And these ones always make you scratch your head when you see them in the biotechs, because they are perhaps the sector most prone to pop when something does come out like that, because they are so dependent on these different approvals, and that could really make or break some of these names. Of course, whenever I see someone doing these things like this and loading up these out-of-the-money calls, and then, of course, it works out, at least initially for them, it reminds me, if you go to, let's say, a craps table in the casino, you see people making bets that are just atrocious, the big 8 or the hardways or, the horn, and they're printing money because people happen to be throwing 11s the whole time. And it's a ridiculous bet, and yet they're printing money, and you're playing the right way, and you're losing, and it's very frustrating. So, see, it's funny sometimes seeing these let's say, less sophisticated trades going up and working out, at least in the near term. Of course, this guy tries to get rid of these things. We'll see what happens to that vol on that strike.
He could have sold he could have sold a good chunk of them today and been left with the rest of the position for free, which is always a nice up. You can own your juice for free. So it's not a bad way to trade if you had a quick win.
Owning juice for free. This sounds like someone else I may know. Andrew, are you behind these Halo calls?
I wish I was, though.
Well, next up here in the old odd block, we have a newcomer. This is, I think Halo is a newcomer as well, but this is Alerian MLP ETF. This ticker symbol AMLP. This is an ETF that invests in the Alerian Infrastructure Index, my favorite index, of course. It's a name that does about 1,200 contracts a day. They did over 30,000 today, closing at about $18, roughly unched on the day. So this was a fairly active name. And what we saw was actually a pretty interesting ratio put spread going up here on the July 18s and the July 17s. A lot of love for July out here in the odd block today. Andrew, tell us what caught your eye out in this ratio put spread in AMLP.
Yeah, this is just a confusing trade for me. I don't, the open interest on it was the 1817. Of course, that's why we call it the odd block. I scratch my head trying to figure out how anybody's going to make any money on this. So I guess this AMLP index stock has just come from like $16. So my only assumption could be they're trying to make a play for it to go sort of back to that level, but not be going down too far, because it looks like they overwrote by the time the whole trade is up. When I looked at it, it looked more like a 1x2, and now it looks like more like a 1x3. So, they're looking for a trade down to 17, maybe down to $16 on it, or 17 and a half. So pretty aggressive type trade. Again, this one I am confused as to the intent of what the person expects. I literally, it's like, okay, I guess they think the stock's going to close $17. Pretty tight range. So it doesn't move a whole lot. It has a 7% realized vol short in the 10-day, but I just think somebody is getting massively front spread and they just don't think the stock's going to move anywhere. That's what the trade looks like right now.
I should, of course, walk them through what actually happened. About 7,000 of the July 18s went up today for a range of prices. Looks like in the 60 to 65 cent range for at least the early lots, the first 7,000 lot or so. And then the July 17s going up initially 15,000. That's why it looked like a 1x2, but then total of 22, nearly 23,000 on the day, which looks closer to 1x3. Those going up in the 30-cent range. Well, they bought one, sold three, or bought one, sold two?
Yeah, because originally it was like 1 to 2. There was all kinds of stuff hitting the tape. Some sold sales, they had to back stuff out. I just looked like they had a hard time getting this whole thing up. But yeah, now it looks like just a real aggressive 18-17 front spread, where they're aiming if the name just, stays where it is or continues up a little bit, the whole thing will collapse and they make money. And they're not looking at a whole lot of downside. Like they're not expecting really the name to go below 17. And if you look at a chart, in mid-December, late December, it was trading 16. It spent a lot of time hanging around 17. So I don't think it's actually, it's not a bad trade. It's just, it's really loaded and it's depending on the stock not really moving a whole lot, which probably it doesn't. So, but I don't know, the market at the very tippy top like it is, it's a little freaky type of trade for me to have that.
We're putting all this nuance and sophistication into this trade, and probably this was a guy on the other end of the phone saying, hey, I can get this off. I can get these puts for about 60 cents. Oh, wait a minute, if I write these, I can take half that off. Oh, wait, if I write them twice, I can get it for nothing. Oh, wait, I can if I put another lot on there, I could do it 1x3 and I can collect the credit. That's probably what happened. That's why that last lot went up so late. He's like, wait a minute, I can collect to do this? He didn't think about where it's going to go. He's just trying to get juice for free to pull from the Andrew Giovinazzi playbook. Or actually,
I guess
in this case,
so.
get paid.
So very it's I would say an aggressive front spread at this point, but in a low volatility underlying. So there you go.
Yeah, that's aggressive in that one. You got to really a very select set of scenarios have to play out for that to really work out.
He's basically he's traded it so he's covering basically right around the low levels of the year. Like worst thing comes to worst, he's buying the low levels of the year with the trade. That's to me what it's looks like. So certainly could happen. I mean, as far as the trade could certainly work out, but You got to really like this Alerian MLP ETF.
Apparently, this guy loves it because he's going to be a size owner of it probably pretty soon.
It's possible.
All right, and last up here on the old odd block today, we have an interesting one. This is WCRX. This is Warner Chilcott Limited. They closed today $20 even. $20 on the day. This is the name that does about 6,000 contracts a day, so they're actually fairly liquid compared to a lot of the names we usually talk about here on the old odd block. It did about 12,000, about 2x that on today's trade, and looks like a lot of this came in essentially a closeout of a collar. Now it's funny, I know you wrote this up as a combo. When I think combos, I always think same strike, but I think you like to think of combos as just any call or put. Even different strikes is a combo in the Giovinazzi playbook. That's why I wanted to highlight this one.
In the olden days.
Back in ye old 40 years ago of options, that was a combo.
When we still threw paper around. I'm looking at a combo. I need to buy a call and sell a put.
The old days. So yeah, walk us through what you saw here. I wanted to run through this one in case some of our listeners or readers were confused on the site. They said, wait a minute, a combo. I thought that's essentially just synthetic stock, and it kind of is, but this is a little bit of a different way to look at it.
I think what this is there was a customer who basically was long a lot of stock. They owned the 16 put in July, and they were short the 19 call. It looks like Warner Chilcott is being bought out. They're in merchant negotiations. The stock just was up like $5 or $6. And now they got to unwind the trade. And on today, when the market pulled back, the Warner Chilcott pulled back a little bit. So if you're going to unwind the trade, you might as well do it when the name's down $25. So I don't know, if the buyout deal is messed up or something, but if they're short the call, they basically made back 25 cents that they didn't have before, because they're short the 19 call, and now it's only worth about $1. So it came in pretty good for them. And there is still a little juice in the thing, which was a little surprising. So you have to see what kind of buyout deal is. But basically, it was the 19 call they were buying back, and they were selling out the 16 put. And there was so much open interest on it. I don't know why you would open a position like this for an ARB and pay the juice on the 19 call. It wouldn't make any sense to me. So I found that a little, unless they think maybe some other bid might or something like that might step in. But it looked just like it could only be really looked like a closing trade to me.
Yeah, a ton of open interest on this strike. So this guy could have more to go on this.
Yep.
Looks like about 18,000 open on these July 16 puts and 30,000 open on the 19 calls. So maybe he did this on the ratio. And it worked, obviously, because if he's long the underlying, he's doing great. If he wasn't long the underlying, not so much.
He lost a little bit of money.
And this is, of course, if you're wondering what this is, Warner Chilcott Public Limited is a specialty pharmaceutical company focused on women's health care and all sorts of fun stuff like that. So a very specialty. We like our bio names. This is another, our pharmaceutical names here on the Odd Block. This is another one. $20, a little rich for our blood, but an interesting name nonetheless. And we'll have to keep an eye on this one because, as we highlighted at our event last week, sometimes you like to find names where there might be some more to go that could certainly help you set up some trades going forward. So that's going to do it for today's Odd Block. You can now remove your fedoras, and we shall continue with our regularly scheduled program, rolling right on into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OX radio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, listeners, this is, of course, the Xpress Block. This is the portion of the show where I hand the reins over to the Viceroy, and he takes us deep behind the curtain into the land known as OX. And Alex, you mentioned today was an exciting day from an Idea Hub perspective because you have a new underlying, a new index to play with. So it sounds like a lot of things were cooking over there in the land of the Idea Hub.
Yeah, it was a busy day here. In fact, the option desk was had a very hectic first 2 or 3 hours of the trading day today. Obviously, when markets were down, and one email I get a lot is, "I thought you're an electronic firm. What do you mean that the desk was busy?" Let me just talk a little bit about the fact that there is still actually a physical options desk and a physical futures desk here. And those are available for customers who maybe can't get in electronically, or customers who want a little more help. But yeah, the phones were lighting up early today for the first couple hours, and then busy again right at the close. One name that we haven't talked about yet was Hewlett Packard today, which moved about $3.50 and is sitting in a lot of portfolios. So that was something that was lighting up the phones today. And speaking of Idea Hub, as long as we have brought it up, I thought I'd pull an idea off the Idea Hub, and with the VIX back up in the 14 area, obviously that's given some trade lift to SPX SPY and SPX PM. So I thought I'd pull one idea off the hub, and those are the June condor in the SPX, the 1600 1590 on the put side, the 1710 1720 on the call side. That's about 55, 60 points out of the money on both sides, trading for $1.40. We haven't seen numbers like that in a while. So it's kind of good to see a little premium coming back into the S&P market. And one of my favorite indicators is the 10-year is over 2%. And anytime the 10-year gets over 2%, we have a small party up here. And today we're closing just a hair over 2%. So interesting what's going on there. We talked a little bit about the 10-year at the beginning and how the realized vol has popped a bit. Realized vol in the 10-year, I think today is 18, 19%. And as Andrew pointed out, rarely do you see the 10-year implied above 10 or 11, and sometimes it's as low as 4 or 5. So it's good to see the 10-year get up into the twos. It'd be nice to see it get a little higher, maybe 210, 220. It would not be fun to see it get a lot higher, but that's what was lighting up the phones and keeping us busy here today.
Well, thank you for that, Mr. Viceroy. And now we're going to keep on rolling right on into the strategy block.
The strategy block.
All right, Mr. Tusaw, and I am fresh from a preschool end-of-year field trip today, so I gave the birdies the day off. So I'm playing fast and loose with the strategy block today. I'm handing you the reins. I have no idea what dark and scary rabbit holes you're going to bring us down, sir. So take the reins and go with God.
Okay. This is an advanced term that I came up with probably about 8 seconds ago. Nimbility, the ability to be nimble in the strategies.
I like that. That's a good one.
Oh, thank you. Thank you. What I want to go through today is oftentimes I think it's just important to be nimble in markets. And the reason why I want to bring this up is that there are a lot of, as we put it on this show, degenerate premium sellers out there that just don't want to stop selling premium. And the reason I bring this up right now is because of the fact that if you've been doing covered calls over the course of the last couple months, you've missed out on a pretty nice market move, most likely. And the reason I'm bringing this up is that being nimble doesn't necessarily mean totally flip-flopping your strategies. Now, granted, I have gotten away from premium selling. I will be the first to admit that. But another way with which you can sell premium, there's other ways of doing it to where you don't necessarily have to do just a covered call or just an at-the-money put or just a credit spread or just a condor. You can do other things. Too bad Sebastian's not on the show. I'm going to make an 80s reference right now. Back when they first started to come out with those near beers back in the 80s, when they'd often say things, it's what beer drinkers drink when they're not drinking beer. O'Doul's, whatever the case may be. And what I want to go through is that there's other ways with which you can have theta on your side, or you can make it so that time decay is working in your favor, and it doesn't have to be a credit spread. It doesn't have to be a covered call. If you're concerned that the market's going to go up and you're just one of those guys, you can't handle being in a trade if you don't have time decay working in your favor, and you want to be somewhat neutral and you're just kind of concerned with it, there's ways with which you can set up calendar spreads to do that. Or there's ways with which you can modify your credit spreads to do things like that. So what I would encourage everybody to do is don't just look necessarily at, well, I do credit spreads. That's what I do. And I do them 5 points out of the money. That's how I do them. I would encourage everyone on this show who trades anything in the option world to look at what is your position delta? What is your position theta? Is theta still working in your favor? And if the answer is yes, then it's the same darn thing as selling a put naked or doing a covered call or whatever the case may be. What you need to then do is determine, do your deltas, does your position delta match the position with which your core type of trade strategy that you like to do? Does your position gamma match? Does your position vega match? That's not going to be perfect, but there's other ways with which you can do things to create your comfort level on what really matters, the position Greeks, as opposed to just what you always do. So with that, remember, folks, nimbility is what we want to go for in this marketplace.
No, you're right. So many people get... Let me just turn you down because I'm getting an echo. There we go. I'll turn you up again when it's time for you to speak again, sir. But yeah, you're right, Uncle Mike, that so many people get locked into their favorite trading strategies. Over the past few years, it seems like iron condors are just a thing. Everyone and their mother wants to trade iron condors, and they're usually writing iron condors. Or they're downside put sellers, or they're 5% out of the money put sellers, or they're put spread sellers, or some variation therein. But there's a couple of trades that people tend to lean on all the time, and they very rarely get out of that comfort zone. They get out of that skill set, and they try to force things in environments that, really things aren't ideal. Let's say for the premium selling in particular, there's been some rough roads to hoe. You're right. Covered call guys, they've been clipping a lot of their gains of late if they've been sticking to steadfastly writing calls no matter what the underlying market was doing. So a lot of interesting things you could do there. And you're right. I think the calendar spreads are an interesting way to go. Of course, for a lot of our listeners, I think the calendar spreads are really where the rubber meets the road. A lot of them, they kind of get a little scared when you start talking about doing that delicate balance of the Greeks, the dance of the Greeks, where you got to balance gamma versus vega versus theta. That I think gives some people some cold shivers at night, so they tend to stick with the nice simple put spread. Don't you agree, Uncle Mike?
Yeah, I would definitely tend to agree on that one. It gives a lot of people the old night terror, where they wake up shaking in the middle of the night for no reason.
The dance of the Greeks. It terrifies many, including me whenever I go to Greektown and I get the Saganaki and they have to dance. It's quite terrifying. But silly references aside, it's time to keep on rolling right on into our final segment, Around the Block.
Around the Block.
All right, listeners, you know what those car horns mean. They mean it is time for our last part of the show. This is where we tell you what we're looking forward to, what we're watching for the rest of this week. And, of course, since this is a holiday week, I have to kick off the Around the Block segment by cautioning you once again, if it's not too late already, to watch out for that weekend. We touched on it a little bit earlier at the top of the show and how aggressive these liquidity providers can be in sucking out that theta, sucking out that time decay in anticipation of a long weekend like this coming holiday weekend. Of course, they can get a little overzealous. So if you're one of these guys who's chasing the premium sale going into Friday and Friday afternoon, probably want to keep your powder dry on that one because you're probably selling at levels that have already been decayed to Tuesday, if not perhaps beyond. Hence, this is why we usually see that little bit of a pop after these long holiday weekends because they know they decayed these things too much and it pops back in. So if you're selling on these levels going into mid-session or later on Friday, certainly be cognizant of what you're actually doing, because you're probably selling on let's say, a less than ideal level from a volatility perspective. And also, don't be afraid to buy something every now and then, particularly on these days. You can get a whole weekend essentially for free because you've already got the decay come out of it, and then you buy it, and hey, it pops a bit on Tuesday, and there are worse things than that. So you get a whole weekend worth of protection, and we all know there's a lot of things that can unfold on a weekend these days, a lot of very literal weekend risks. So maybe you turn away from the dark side a bit and you pick up some juice for very, very low rates. Is that what you're going to be doing this weekend, Andrew? Going to be scouting for some juice bargains?
I'm actually doing nothing this weekend. Almost everything is closed because I'm going on vacation.
Oh, I forgot. Hither and yon. I forgot. That's a long way to go.
I don't. But the one thing we looked at, actually, the most interesting trade was selling the juice in the TLT today. It already came in a bunch. We looked at it in our pit report. And it looks like we'll probably be taking it off tomorrow as they crush things into the 3-day weekend. So, because the vol was pretty bid in there all day. And they just kind of were ignoring the whole, I think the weekend effect will kick in and we probably can close it tomorrow. So yes, we looked at that and we actually are short some short-term juice in several places. So.
Just wait till that 10-year VIX kicks in, and then all the juice you'll be able to harvest out there. It'll be unbelievable. The 10-year treasury VIX, I should say. So, yes, interesting stuff out there. Uncle Mike, what's catching your eye for the rest of this week into the holiday weekend?
Well, it's always concerning going into a holiday weekend with lower volume and just crazy things happening on not a lot of volume. So keeping the powder fairly dry for right now, and going to get back after it next week.
Speaking of keeping the powder dry, this is, of course, the weekend where many people think that oft abused cliche of sell in May goes away, really kicks in. You dump it before the Memorial Day weekend, you come back in September, and you haven't missed too much. So if you're one of those die-hard adherents to that philosophy, then this is your time. This is your time to shine. Or perhaps just wash your hands of it all and come back later. Mr. Alex, I know you're probably sick to death of that cliche because you've been around even longer than the rest of us. But what's catching your eye for the rest of this week going into the weekend, sir?
Ouch, I'm the old guy. Markets are going to be thin tomorrow. This is going to be a 3.5-day weekend for much of the community. So if you've got stuff near strike, if you got weeklies near strike, I wouldn't be waiting around till 3 o'clock Central Time tomorrow. I think markets are going to be thin. That means bid offers are going to be generous. And so I would be a little cautious. I really like the idea of owning a little premium in this environment. You saw it this morning, Last night, everybody was, running around like chickens with their heads cut off. Tokyo was the end of the world, 7% move. Bernanke's going to stop buying bonds, and we finished virtually unchanged. So I still think this is a bull market. I still think the conditions exist for it to be a bull market. As I mentioned, I moderate our social site, and the first day you're down, you get all these posts of people who said, crash on Friday, end of the world. It's just, it's that pervasive, loudest voice attitude that frequently has no sense of what they're talking about. So, be a little careful here. I wouldn't mind picking up some premium tomorrow to carry into next week. But I think it's going to be a thin day, and I'd be cautious about trading tomorrow.
Good point about the weeklies. If you're one of these guys who waits to the last minute to harvest every last penny out of those weekly shorts in particular, then tomorrow's a day where you may want to act a little bit more aggressively on that because, as Alex said, these things are going to be thin tomorrow. We could be gapping all over the place, and next thing you know, that thing at decayed down to 2 or 3 cents is now trading 10, 15, 20 cents or maybe even more just because you failed to act when you had the opportunity. So don't, remember the old adage, pigs get fed, hogs get slaughtered on a day like tomorrow. That can certainly come into stark relief if you're not careful. So watch out, all of our savvy option block listeners out there. We don't want you to get caught in the crossfires of the holiday weekend. And unfortunately, that's all the time we have for the program proper. Before we sign off, I do like to check in with each of my cohorts, my partners in crime, to see what's cooking in their respective necks of the woods. Starting off with you, Mr. Alex. What is coming up in the land of OX?
So there are a ton of new features coming to the platform. We're going to talk about those next Thursday. Next Thursday show it'll air on Friday, but on Thursday, which is the 30th at 2 p.m., we're doing a webinar showcasing many of the new features, and there's a lot of stuff people have been asking for, especially in our streaming charts, that we're going to be releasing stuff over the weekend to kind of test it and prove it. June 1st, a live event in Atlanta, and all our live events are simulcast now, so you don't have to go to the event, although if you're in Atlanta, obviously it's a fun event to attend, get to see some of the great expertise. Jimmy Ruzan, who was a CBOE market maker, worked with Andrew, leads the live event. And as I say, good holiday weekend, everybody.
Speaking of Mr. Andrew, what is coming up in the land of the pit, sir?
We have all kinds of fun events. Mr. Sebastian is actually going to talk about trading the option wheel trade. One of, I believe that is a term coined here, and that is coming up. I'm looking actually at our register and event page. I believe it's next week. What has he got here? Yes, May 30th, 4:30 Eastern Standard Time. So telling you about basically selling calls and puts into stocks that you're interested in owning. So a nice, it's a really nice webinar, and it also helps people basically understand, how to sell juice and when you should be selling juice. That's kind of the really key thing. It's not something you just sort of, it's a Tuesday and it's my juice selling Tuesday. You want to think about it a little bit. So Mark will walk through some of that stuff for you, and that will be on the 30th. And we had a hugely attended Why to Take Our Gold seminar last night, which you can go to optionpit.com, search in there for it, and you can grab a link. And it was, it was well received. So that's what we got going on there.
So you do that too, huh? Every Tuesday, like clockwork. Blast out some juice, then wash your hands of it and go home.
Exactly, because it's Tuesday.
Yes, exactly. When else would you sell your juice?
Selling Tuesday.
Sell on Tuesday and go away is what the adage really should be, because that's where the money is. Tuesday. All right, Mr. Tusaw, save us from this nonsense. What's coming up in the land of RCM?
Not a whole lot this coming week, but after that we plan on having the webinar train back in full force in the month of June. But just going to enjoy the holiday weekend and get back after it in June with some more webinars.
We'll be looking forward to it. I'm still waiting for my stupids.
Nah, it's probably lower on the priority list, I have to admit.
You're killing me. You're killing me, Uncle Mike.
We'll get there someday.
I might have to do my own Ratio Stupids webinar just to mock you and say, ha.
Oh, now you're inspiring me.
There is love for the stupid. All right, and speaking of stupid, I should say, speaking of the opposite of stupid, of course, all of our listeners out there, certainly not stupid, quite savvy to download a show like this. But of course, we, on behalf of all of my Option Block cohorts, I want to thank you for downloading and streaming and subscribing to this program, making it such a success. And of course, we love hearing from you. Continue to send in your questions and comments. We'll get to those on some shows next week. We'll, of course, be off for the holiday weekend, so no show on Tuesday morning, but we'll be back on Thursday in full force. So look forward to that, and we'll see you next week right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.